Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today we are going to discuss another problem on hire purchase. This is lecture number 8 on the topic hire purchase, and you can see the other 7 lectures in the playlist section of the channel. I have also given the link of the playlist of hire purchase in the description box. I would like to request all the students to note the question along with the solution the way I have solved here for you. If you find any difficulty, please feel free to contact me over email that I have given in the description box. Raha Transport Company purchased from Howrah Motors 3 motor vans costing rupees 50,000 each on the hire purchase system on 1st January 2013. Payment was to be made as rupees 30,000 down and remainder in 3 equal installments payable on 31st December 2013, 31st December 2014 and 31st December 2015, together with interest at the rate of 9%. Raha Transport Company writes off depreciation at the rate of 20% per annum on the diminishing balance. It paid the installment due at the end of the first year, that is 31st December 2013, but could not pay the next on 31st December 2014. Howrah Motors agreed to leave one van with the purchaser on 1st January 2015, adjusting the value of the other 2 vans against the amount due on 1st January 2015. The vans were valued on the basis of 30% depreciation annually. So, the necessary accounts in the books of Raha Transport Company for the years 2013, 14 and 2015. Here, we are preparing the ledger in the books of Raha Transport Company. So, I am writing here in the books of Raha Transport Company motor vans account and Howrah Motors account. So, on 1st January 2013, Raha Transport Company purchased on hire purchase 3 motor van costing 50,000 each. So, motor van account debit to hire vendor account, that is Howrah Motors account. So, in motor vans account, I am writing on 1st January 2013 to Howrah Motors account 1,50,000. 50,000 into 3. Now, in Howrah Motors account, I have to write on the credit side on 1st January 2013 by motor vans account 1,50,000. So, on the same date, that is on 1st January 2013, there was a payment made by Raha Transport Company rupees 30,000 to Howrah Motors account. So, on 1st January 2013, I have to pay here to cash or bank account rupees 30,000. So, this is the down payment made by Raha Transport Company. Now, on 31st December, depreciation will be charged on motor vans account. So, I have to write by depreciation account, and the depreciation is charged 20% on diminishing balance method. So, 20% of 1,50,000 is 30,000 rupees. So, written down value on 31st December 2013 is 1,20,000. And in Howrah Motors account, you have to charge interest for the year on the balance. So on 31st December 2013, I have to charge interest. So interest account debit to Howrah Motors account. So interest account. So what is the amount of interest to be charged? That is 1,50,000 minus 30,000. So 1,20,000 is the amount which was balanced. And this amount carried for the whole year. So at the rate of 9%. So 10,800 is the amount of interest. Now on 31st December 2013, installment will be paid. The first installment after down payment. So cash or bank account. So what is the amount of the installment? Let me show you. So 1,50,000 is the cost of 3 motor van, and down payment made, so less down payment is rupees 30,000. So 1,20,000 is the amount which was due to be paid to Howrah Motors. So this will be paid over a period of 3 years. So installment amount is 1,20,000 divided by 3 or 40,000. So 40,000 is the annual installment. And here you have to pay the annual installment of 40,000 plus interest of 10,800. So 50,800 is the amount of first installment paid by Rahat Transport Company to Howrah Motors. Now, what is the balance amount as on 31st December 2013? This is 80,000. This is the balancing figure. So this way, we have completed preparing the ledger for the first year, that is 2013. Now on 1st January 2014, this amount of 1,20,000 will be brought down. So to balance BD 1,20,000. Now on 31st December 2014, again depreciation will be charged. So depreciation account debit to motor vans account. So depreciation will be 20% of 1,20,000. So this is 24,000. So 20% of 1,20,000. And the balancing figure will be 96,000. This is the written down value of the 3 motor van in the books of Rahat Transport Company. Now what is the position of Howrah Motors account? So on 1st January 2014, the amount which was due to Howrah Motors, I have to carry forward 80,000. So by balance BD is 80,000. Now you have to charge interest for the whole year on 31st December 2014 by interest. So account. So what is the amount of interest? 80,000 into 9%. So this is 7,200. But on 31st December 2014, no amount was paid. Rahat Transport Company failed to pay the installment. So here I have to write the balance amount. So this is 87,200. So this way I complete the second year accounts. So in the asset account, on 1st January 2015, I have to write the written down value as to balance BD. This is 96,000. And on 1st January 2015, I have to write here the amount due to Howrah Motors account, that is 87,200. Now on 1st January 2015, 2 motor vans were repossessed by Howrah Motors. So you have to value what is the written down value or the value of the 2 vans which was repossessed by Howrah Motors, and the value of the 2 motor vans will be adjusted against the amount which is due to Howrah Motors. So let us compute the valuation of the two motor vans repossessed by Howrah Motors. So here I am doing the calculation. So this is working note number 1. So valuation of two vans which were repossessed by Howrah Motors. So the cost of the two vans, 2 into 50,000. So this is on 1st January 2013. So this is 1 lakh rupees less depreciation charged on 31st December 2013 at the rate of 30%. Now it is not given whether the 30% rate is on straight line or diminishing balance method. Now since we are charging depreciation in the books of Raha Transport Company on diminishing balance method, so we are also calculating the depreciation as valued by the Howrah Motors at the rate of 30% on diminishing balance method. So 30% of 1 lakh is rupees 30,000. So written down value on 1st January 2014, the written down value is 70,000 and depreciation on 31st December 2014 at the rate of 30% is 21,000. So this is the written down value on 1st January 2015, on which date the vans were repossessed by the hire vendor, that is the Howrah Motors. Now the value of the two motor vans we have computed here is 49,000. Now this is the account we are preparing about the Howrah Motors account. Now what is the amount due to Howrah Motors on 1st January 2015? This is 87,200. So 49,000 is the value of the two motor vans. So here I am adjusting the amount. So on 1st January 2015, you have to write here two motor vans account. This is 49,000. So in the motor van account, I have to write this figure on 1st January 2015 by Howrah Motors account 49,000. Now what is the value of the two motor vans in the books of Raha Transport? That is 96,000 into 2 by 3. So what is this is the working note number 2. So written down value of two motor vans in the books of Raha Transport. So rupees 96,000 is the value of three motor vans. So here I am multiplying 2 by 3. So this is 64,000. So due to the surrender, this is the loss on surrender. So 15,000 is the amount of loss due to surrender of these two motor vans. So the balance amount on 1st January 2015, I have to charge to PL. So PL account debit to motor vans account, this will be 15,000. And this is loss on surrender. On 31st December 2015, you have to charge depreciation on the third motor van. So this will be 6,400. 32,000 is the value of the third motor van, and you have charged 20% depreciation, 6,400. So balancing figure, that is the written down value of the third motor van on 31st December 2015 is 25,600. So 25,600 is the written down value of the third motor van. So 96,000 is the sum of the debit and the credit side. Now what is the amount which was due to Howrah Motors Company. So this is on which the interest will be charged. So on 31st December 2015, we have to charge interest. So interest account debit to Howrah Motors account. So what is the amount of interest to be charged? So 87,200 is the amount which was outstanding on 1st January, and 49,000 will be reduced from this outstanding because the value of the two motor vans was valued at rupees 49,000 into 9%. So this figure is 38,200 into 9% will give you 3,438. So 3,438 is the amount of interest to be charged for third year, and this amount will be paid with the balance due. So on 31st December 2015, the third installment, basically on which date it was payable, will be paid. So motor vans account debit to cash. So what is the amount? This will be the balancing figure that will be paid by Raham Motors Company to Howrah Motors. So this will be 41,638. 38,200 is the outstanding amount along with interest of 3,438. So this will give you 41,638. So 90,638 is the sum of the debit and the credit side. So here I am presenting the two ledgers that I have prepared. One is the motor van account and the Howrah Motors account. This question is an example of partial repossession. So I would like to request all the students to note the problem, the question first, and then you do the solution along with me. If you find any difficulty, please feel free to contact me through email that I have given in the description box. This is problem number 8 on hire purchase, and the remaining 7 problems you can see in the playlist section of the channel. Thank you. Thanks for watching the lecture.